PepsiCo, one of the best dividend stocks in the world, just reported earnings and is up over 7.3% on the day. This is a big surprise after a couple years of poor performance, being down nearly 34% from its all-time high. However, some investors use that as an opportunity to buy the stock at its highest dividend yield ever. Just in the past few weeks, you could have bought PepsiCo stock at a 4.4% dividend yield. And even after rising today, PepsiCo stock is still at one of the highest dividend yields ever. That said, the poor stock performance and a few bad quarters made some investors worried that PepsiCo stock may be at risk of a dividend cut. Today, I'm going to give you an updated stock analysis on the company, explain why it's up 7% after earnings. I will dive into the key financial metrics like free cash flow, dividend safety, and outlook for future quarters. If you stick around to the end of the video, I'll share what the PepsiCo CEO just said after releasing the quarterly results, and even give a brief comparison to their key competitor, Coca-Cola. With that said, let's roll the intro and jump into this stock analysis of a popular dividend aristocrat, PepsiCo. My name is Zach, this is Dividend Data, and you should leave a like and subscribe to the channel if you enjoyed the video. I hope you all are having a great summer. This is the first video I've recorded since we ended our summer sale at dividenddata.com, and I just want to thank everyone for your support. We had a great sale, and the research tool is on pace for fantastic growth year over year. And although this is the first video I've recorded, I've been hard at work at improving the software tool. You're going to be seeing a lot of updates rolling out to dividenddata.com in the coming weeks. On top of that, I have a top secret technical project I am working on. We're still in the early stages, but it is going to be taking up a lot of my time. And if you're a website member, you're going to love it. I'm going to codename this like Project X or something. And all I can say is that I'm very excited about it, and a lot of our users are going to love it. So let's take a look at PepsiCo. That's ticker symbol PEP. This is the snack and beverage giant. They own many top brands you know, like Lay's, Fritos, Cheetos, Doritos, and in beverages, Gatorade, Lipton, Pepsi, of course. And they even have partnerships with companies like PepsiCo to do their ready-to-go beverages. This is just scratching the surface too. PepsiCo is a gigantic company, and they own many of the top brands you would recognize in grocery stores, both in the United States and internationally. The stock is up 7.27% after reporting earnings. So let's jump into those earnings results and try to explain why it's up so much. Well, as you can see, PEP stock reported on Thursday before market open, and the results were actually very good. Earnings per share came in at $2.12 for the quarter, which beat expectations by 4.43%. On top of that, revenue came in at $22.7 billion, beating expectations by 1.7%. And as you can see, looking at PepsiCo's quarterly earnings per share, you can see that $2.12 number is the second best Q2 earnings ever for PepsiCo. It's down slightly from $2.28 in the year prior, but it's up from $2.09 in 2023 and far outpacing 2022, 2021, and 2020. Now, the company had a beat and progress in their non-GAAP earnings per share, as I just explained, but I always like to look to free cash flow, and I kind of use that as the key metric of dividend safety over the long term. And dividenddata.com, since this just happened, hasn't updated yet with the data. So I was diving through PepsiCo's latest report, and I was having a little bit of trouble actually finding a good number, because instead of reporting the quarterly results, they do it over a 24-week period, which is just under 2 quarters. And based on that metric, free cash flow appears to be negative, but it was also negative last year in that time because Q1 is always a big loss if you go and look at the historical cash flow statements for PepsiCo. So I guess based on Q1 and Q2, we're slightly under free cash flow, which is not the best sign because the free cash flow payout ratio for PepsiCo stock in 2024 was just over 100%, which if that continues would be unsustainable. That said, the company does normally pay out a very high payout ratio, and this is by design. They choose to pay out the majority of their cash flows as dividends. They even stated right there, we expect to continue to return free cash flow to our shareholders primarily through dividends. We'll talk more about free cash flow and dividend safety though later in the video. Now let's talk about the latest quarterly results for PepsiCo and what the company said during their latest earnings call, as well as the key reasons that PepsiCo stock went up so much today. And throughout, I'm going to be using the AI analyst over on dividenddata.com. This feeds with the latest actual verified stock data and transcripts of the quarterly results and earnings calls. So you can see here that I asked, please summarize the latest quarterly results and earnings call for PepsiCo, PEP, and what is the future outlook? And it's important that we focus on what was going on prior to this with PepsiCo. In prior quarters, their North America snack business was seeing a slight decline, and that was the big drag on the company. Their international business was seeing strong growth, though, during that time, but they are more North America focused. So what happened this quarter? They saw improvement in their North America business, the food category stabilized, and they saw growth in their away-from-home business. The international business continued strong performance with mid-single-digit growth in both foods and beverages. The company is also seeing improved productivity in their business, which is leading to some savings, especially in Frito-Lay North America. And overall, the company reaffirmed their guidance for fiscal year 2025. That's on the low end of its long-term organic sales growth, and that's mostly due to the strong international performance and improvement in their North America business. If you're wondering, that means you should expect a low single-digit increase in organic revenue and constant currency earnings per share to be approximately even with the prior year, as well as cash returns to shareholders of $8.6 billion, $7.6 billion of which is from dividends and $1 billion from share repurchases. I also asked what the key reasons PepsiCo stock is up after earnings today, and the results were a lot of what I actually found in my research. As an example, we have the productivity increases, we have the improvement in the North America business, strong mid-single-digit growth in international, and something that the CEO mentioned today. I don't think I'm including it though in the clip I will be sharing later, and that's around tariff news and how they expressed confidence in the ability to mitigate the cost of tariffs, and that's due to largely having a domestic supply chain, and the only real thing imported is some ingredients, but they said they feel confident in their ability to deal with that. So overall, you may be looking at these PepsiCo results and not really blown away. I'm not necessarily blown away either, but I think what this really is a signal of is that the bleeding may be over. There was worry over their business results getting worse, and the one segment snacks that was doing bad seems to have stabilized. So before I get to the CEO interview and his commentary about how he thinks about PepsiCo going forward, I'm going to do a brief overview of their dividend and dividend safety. On June 30th, they're expected to be paid their next quarterly dividend, which is a 4.98% increase from the prior dividend, and this continues their trend of annual dividend increases. The 10-year CAGR is 7.31%, and it was operating at these 7 to 10% increases for a while, and in my opinion, that was outpacing their fundamental growth during that time. Now the company is slowing down their dividend growth at 4.98%. And I think that was a signal of weakness in some of their business segments like North America food during 2025. You also see other worries like a rising payout ratio, especially in free cash flow, but it's still very healthy based on their net income payout ratio. And I know the fears around a PepsiCo dividend cut are rising, especially with the poor performance in recent years, but I personally remain unconcerned about a dividend cut at PepsiCo. My bigger concern is the slow growth at the company. And I think that will lead to continued lower dividend growth. And I am concerned about the total return for PepsiCo stock and whether or not that could beat indexes like the S&P 500. It may be able to if you nabbed it at some of these low prices, but I would not be chasing PepsiCo stock if it starts to rise over the next few weeks and months. This is one you need to be patient with, and if you're buying it for the reliable income and the overall lack of volatility. This is probably a good retirement income type stock, and that's how you should be viewing it and valuing it. Despite being up nearly 7.5% today, PepsiCo is probably not a growth stock for the future. Hopefully, though, in future years, it can continue to being a solid dividend growth stock. I personally don't own PepsiCo in my dividend growth stock portfolio, but I know many people in our community do. And on a big picture historic view, it's one of the best dividend stocks of all time. And whether or not you want to buy the stock now or continue holding or reinvesting, that's up to you. But there's no doubt that PepsiCo as a business will be around for decades and decades to come. It has great brands and great competitive advantages. And it's one of the companies in the stock market you can be sure will be here in some form or another 100 years from now. And that says a lot. Since 1990, PepsiCo stock has a total return of 3,219%, and this company is not done yet. Let's hear what the PepsiCo CEO just had to say about the company's latest quarter, and I'll give some of my thoughts around his commentary.
We're very pleased with our Q2 performance. We've seen an acceleration of the business in the US. both in snacks and in beverages. We're seeing a continuation of very strong international growth. That business has been very consistent for us. It's a $40 billion business that continues to grow at mid-single digit. In the US, we're seeing a acceleration, as we're saying, sequential acceleration. We're seeing more competitiveness in our business. We're more competitive in many of the subsegments of foods and beverages that we participate. We're very pleased with Pepsi. Pepsi in the cola category continues to gain share behind non-sugar, behind some of the Pepsi and food advertising. Some of the taste challenge is great. We're seeing good rate, gaining share in sports, Propel. And in foods, we're seeing a stabilization of the category. That was our number one priority, stabilizing the salty snacks and the savory snacks category. Now we're growing share in some of the snack segments. We're growing share with Cheetos. We're growing share in with Doritos. We're growing share in permissible snacks, which is the large segment. So pleased, and we think that sequential improvement will continue over the coming quarters.
Why? What changed?
That was a big statement there where he said this sequential improvement will continue in the upcoming quarters. And again, that kind of reaffirms my reason for why the stock is up. The implication is that the bleeding and decline in some of these categories is over, and the company is signaling that there will be improvement in coming quarters.
Well, nothing has changed. We've been working at strengthening our brands for quite some time. We've been working on finding the right affordability levels for the consumers to stay in our categories. We're continuing to invest in away from home very structurally, and that's a channel where we're seeing incremental locations for our brands. So it's been more of a strong productivity, consistent productivity, reinvesting in value, reinvesting in the brands, bringing some innovation to the market in the segments of the category where there's growth. And that tends to be more on the functional and in the permissible part of the business. And we're doing quite well there. So that I wouldn't say nothing has changed. It's more of we're continuing to see the results of the things that I've been doing for a few years now, and we're getting there.
So the main culprit for the slowdown in the recent quarters for PepsiCo is around that snacking business. And the main news is that has stabilized. That snacking business is also a key differentiator with Coca-Cola and PepsiCo. And what is interesting is that Coca-Cola stock has actually done quite well in the recent years, while PepsiCo has fallen off a cliff. Coke is trading at a trailing P/E ratio of nearly 28 times, and on a forward basis, 23, while PepsiCo, after rising 7.5%, is at a 21 P/E ratio. And Coke is trading at 2.9% dividend yield, while PepsiCo, even after going up, is still at a 3.9% yield. And the key difference is that Coca-Cola is beverage only, where PepsiCo is diversified across beverage and snack. I will also add this because I feel like I have to. Coca-Cola, the actual product, Coca-Cola and Diet Coke and Coke Zero and all that, I would argue that PepsiCo doesn't actually have a product as good as that. And that product really is the cash cow at the Coca-Cola company. But with that said, you don't really see a lot of the market fears around Coca-Cola stock. And if we look at their dividend and its payout ratio, you can see that the free cash flow payout ratio for Coca-Cola is actually far worse than for PepsiCo. And Coca-Cola has been around this 5% dividend growth for years. The 10-year CAGR, 4.45%. The most recent dividend increase was 5.15%. And when you look at the history of these companies, there are years where free cash flow payout ratio can be over 100%. But again, I don't think this puts the actual dividend payment at risk. Coca-Cola is another example of that. Now let's get to PepsiCo with their snacking business and what the CEO had to say specifically around snacking and its future with PepsiCo.
A couple of things impacted our growth. After many years of tremendous growth, during COVID and after COVID, inflation really took a hit on consumption. And what we've been working on is on recovering the affordability of the category and making sure that families that are more stretched in their finances can continue to participate in what is, at the end, a discretionary part of their diets. No? Nobody needs to buy snacks to survive. So it is discretionary. We need to make it, on the one hand, affordable, on the other hand, more permissible, because clearly consumers are more aware of nutritional needs and what is in the product. So, we've been working on both affordability and a better profile of the product, and then working on making the products available everywhere, away from home and retail, and that will continue to create growth for us. So I'm not worried at all. Actually, I'm very excited about where the snacking category is going, the same as the beverage category. So that is a big idea for us to participate in both food and beverages, and we'll continue to do that because there's a lot of synergies between the two categories.
Although the market seems to be negative on PepsiCo's snacking business, I'm kind of with the CEO. I like that they're diversified across the two, especially when you consider the different business strategies of Coca-Cola versus PepsiCo. They're both very large conglomerates, but PepsiCo has way more embraced that going across the two categories. Coca-Cola is diversified across beverages, but at its core, it's really still that one big cash cow product. Overall, to summarize my thoughts, I'm not that worried about a dividend cut. I would like to see improvements in the company's free cash flow, and for the stock to continue doing well in the coming years, they need to see growth reaccelerate. My expectations for the dividend growth would probably be around this 5% range. They'll probably try and just match around what Coca-Cola is doing. I don't know if they'll be returning to the 7 or 10% growth anytime soon, but hey, time will tell. So that's my updated PepsiCo stock analysis. If you enjoyed the video, please leave a like, comment, and subscribe to the channel. With that said, thanks for watching, and I'll see you in the next video.